Can you explain the investment strategy of the mid caps within the balance advantage and the aggressive hybrid fund what you manage? How do you manage the active allocation and the risk within the same fund?
Sure. So primarily both these products, just to start, these are for investors who probably are not 100% equities and they are in for managing some element of risk, which is why they've chosen hybrids as a category, right? So in case of aggressive hybrid, for example, we have a very conscious choice of having 25% towards mid caps and small caps, and large caps would be around 75%. This doesn't alter materially over a period of market cycle, plus or minus 5%, but we don't stray too much towards the lower end of the cap curve as a conscious choice given where the investors' expectations are. So both these products from a cap curve perspective clearly has a demarcated zone of how much of mid and small caps we operate in. At the best, it would be around 30% in case of hybrid, and in case of BAF, it can go all the way up to 40%. Okay. Now, coming back to how we manage it in terms of our mid cap exposure, we typically try to take the best ideas of our mid and small cap fund and ensure that they have their place in the aggressive hybrid funds, since that we are bringing to the table some of our expertise which we have already replicated in the mid and small cap product of ours. And in terms of sizing up, again over here we do make sure that we don't take undue single stock risk in case of hybrid products, especially BAF and aggressive hybrid. So we make sure that stock exposures are well within 3% in case of mid caps and small caps within the hybrid product, to ensure that individual stock risk is not being unduly taken at a product level. And at the same time, in case of BAF, what we do additionally is that we keep track of mid cap valuations against large cap. If we are in a phase of market where mid cap valuations have stretched themselves well ahead of large cap valuations, we make sure that we stray ourselves a little bit more towards large caps to ensure that the drawdowns are capped in case we have a corrective phase in the market. It's about again managing risk here consciously for a product which is designed to manage risk in the equity journey. So BAF has an additional layer of comparing mid cap valuations at an aggregate level against large cap valuations, and dynamically make sure that mid cap allocations don't remain static all the time. And risk is contained at every level whenever there is a euphoric sentiment coming in. And so is the case vice versa. When the chips are down, obviously BAF has a leeway to go and stretch a little bit more on mid caps to ensure that we make use of emotional fears in the market, and you size up mid cap opportunities as well. But idea generation remains common, and we make sure the best ideas are replicated for the mid cap part of the large cap BAF and aggressive hybrid fund.
Yeah, from an experience perspective of the investor when he is participating in this hybrid strategy, so from your perspective as a fund structure itself, they are more designed for a smoother experience rather than having a wild variation from a expected return. Is that so?
Correct. So over here, like what I said earlier, it's about how do we optimize equities with low volatility. So the both eyes need to be at work. So one is on the equity journey, otherwise the other eyes is on the volatility part. So from mid and small cap, the boundaries and the guardrails are very much set right from a product structure perspective. And at the same time, the alpha generation comes from the mid and small caps when you look at a 5-10 year journey in these products. So you need to balance the upside as well as the risk involved in these categories over the medium term, and that's what we designed to do.